Can my credit card company change the terms of my account? Yes, credit card companies have the right to change the terms of your credit card agreement. Your credit card company must notify you of significant changes to your account terms with a 45-day advance notice. This includes changes to your interest rate, fees, increases to the minimum amount due, and changes to the grace period or the way interest is calculated. However, you might not receive a 45-day advance notice for changes to non-essential benefits, such as points or cash rewards, or changes in the card brand, for example, switching from Visa to MasterCard. You have the right to opt out of these changes if you do not agree with them. There are restrictions on what changes the card company can make. For example, card companies generally cannot increase the interest rate you pay on existing balances, except under specific circumstances. If you disagree with the new terms, you have the right to opt out of them. However, opting out may result in the card company closing your account. If this happens, you are still responsible for paying off the balance over time, but your minimum payment may increase. The new minimum payment cannot be more than the amount needed to pay off the balance in 5 years, or double your prior minimum payment, whichever is higher. Remember, closing your account may negatively affect your credit score because it reduces the amount of available credit you have, thus increasing your credit utilization ratio. If you're thinking, when can my credit card company increase my interest rate? Credit card companies can usually increase your interest rate with a 45 advance notice, but certain steps can potentially lower your interest rate. Here's how it works. Interest rate changes for new purchases. During the first year, a credit card company cannot increase your interest rate on new transactions. After the first year, the company must give you 45 days notice before raising the interest rate on new transactions. Any purchases made more than 14 days after the notice are considered new transactions and are subject to the new rate. Interest rate changes for existing balances. A card company cannot increase the interest rate on existing balances except in the following situations. 1. A temporary promotional rate, like a low rate on a balance transfer, expires, which must last at least 6 months. 2. You have a variable interest rate tied to an index, such as the US prime rate, that increases. 3. You miss a minimum payment by more than 60 days. 4. You fail to comply with or successfully complete a payment arrangement with your card issuer to lower your rate. 5. Your protections under the Service Member Civil Relief Act or SCI-RA expire if applicable. Lowering your credit card interest rate. If your interest rate has been increased after a 45-day notice, the card issuer must review and potentially reevaluate your rate at least every 6 months. The issuer may compare your current rate with the rate they would offer to new applicants. If your rate is higher than what new customers would be charged, the issuer must reduce your rate, though it might not return to the original rate. To lower your interest rate, consider these steps. Consistent on-time payments. If your rate increased due to late payments, making 6 consecutive on-time payments can result in your old interest rate being reinstated. Review requests. Request your issuer to review your rate periodically, especially if you believe your credit profile has improved. By maintaining good payment habits and staying informed about your rights, you can better manage and potentially lower your credit card interest rates. Thank you for watching. Don't forget to subscribe and like the video.